Ladies and gentlemen, welcome back to the channel. AMC stock is down marginally today, down about 0.33%, down about 2 cents or so. You're now down half of 1%. Now, here in this video, we're going to get into everything you need to know specifically on AMC stock and our broader markets. Now, something else that is pretty interesting that is happening today, which could cause quite an upside move in stocks like an AMC, is something the Fed decided to do yesterday. So we're going to get into that here in this video. I think a lot of you guys will be excited based on that alone. I certainly was a little bit confused to why, but I think the definitive conclusion to that is a positive one for AMC. So hit the like button as well as subscribe to the channel. Let me know what you think about this information down below in the comment section. So first things first, here's what the Fed is doing. So the Fed announced last night that the Bank Term Funding Program will cease making new loans as scheduled on March 11th. Now, why this is so interesting is because this Bank Term Funding Program is basically what the Fed is doing to basically give the banks par value for their bonds. So banks that bought bonds at super high prices, which would be super low yields, essentially, the government put them in this problem to begin with because they gave out trillions of dollars to people, put it in bank accounts, and banks are only allowed to give loans and buy treasuries. Well, when people are not taking loans at the same rate they were before, definitely not on par with trillions of dollars that was put out there into the system, banking system that is, what choice did the banks have than to go out and buy bonds? Well, some banks went out and bought 10-year treasuries and 20-year treasuries, locked in super long duration bonds. What happened is the Fed raised rates. When yields go higher, bond prices go lower. It works just like a dividend stock does. So what happened? A lot of banks went upside down on their bonds. If they bought a lot of long duration bonds, they're in big trouble. Banks like JP Morgan bought short duration treasuries. They did exceptionally well, and that's why JP Morgan is in the spot and position they are in. It's because they did not buy 10, 20-year bonds, at least not with a vast majority of that deposit base. Now, this bank term funding program is at a new all-time high as of January 17th, the last reading that we got, at $161 billion. Now, why would the Fed, the bank's bank, end this program? You got to start asking yourself some pretty logical questions here. Now, there is talk of an ending to quantitative tightening coming as soon as March. Now, if we look at the Fed meeting in March, the Fed meeting in March is going to take place on March 20th. If the Fed is stopping this program, that means they probably expect bond yields to go lower and bond prices to go higher. It doesn't make sense to abruptly just cancel this program when it's being utilized at an all-time high rate. I would understand if nobody was using it anymore, that would make sense to go ahead and cancel that program. But that's, in fact, the furthest thing from the truth. So I do think that means we probably get an end to quantitative tightening here by March, and that will be a big positive for our markets, especially for, again, your interest rate sensitive names, because that should put a lot of downside pressure on 10-year treasuries. Now, this comes at a time of record shorting on the 10-year treasury, and that's also pretty dang interesting because, that suggests yields should be going higher. Now, with what the Fed is doing, that would suggest yields probably are going lower from here. So pretty dang interesting what you're seeing. I think ultimately, if you want to bottom line this, that's a positive. And you can see this from bar chart. 10-year treasury, largest short position in history. Hedge funds are now short more than 889,000 contracts on the 10-year treasury, the largest 10-year treasury short position in history. So when you go short on the treasury, that means you're expecting treasuries to fall, right? You're expecting yields to rise. 10-year treasury yields have been basically doing nothing for the last couple of days here. 10-year treasury yields to 4.13%, down about 4.5 basis points on the day today. We did get some economic data that came out today, and that is most likely what is having the effect on the 10-year treasury. So let's go ahead and take a look at the data and how that came out today. And to my surprise, durable goods orders missed expectations by a long shot. The consensus was positive 1.1% on a month-over-month basis. You actually came in at 0%. So theoretically, this would be bad news for GDP. We can go ahead and update the Atlanta Fed GDP Now tracker. It has not updated as of right now. It should update here pretty dang soon. Hopefully by the end of the day today, we will have a new update. But durable goods orders coming in at 0%, very much a head scratcher. At the same time, GDP has come in stronger than expected. GDP growth rate quarter over quarter, advanced data for Q4 came in at 3.3%. The estimate was 2 to 2.3%. So this came in well hotter than expectations. This is one of those things where it's counterproductive to what the Fed wants to do, but it's great news for stocks, because if we ultimately avoid a recession and we get the Fed that starts cutting rates because inflation continues to fall, well, that is the best of both worlds. That's exactly what you want to have happen if you are a bullish investor in this market, which a lot of people are bullish investors in this market. Taking a look at the latest AI investor sentiment survey, you can see we do have more neutral investors as I expected. Neutral investors climbed from 32.9% to 34.6%, so an increase of almost 2%. Bullish investors decreasing about 1% from 40.4% to 39.3%, almost in line with historical averages. And your bearish investors actually decreased a little bit from 26.8% to 26.1%. So I think conclusion here is the markets are very neutral. Nobody really knows what is coming next. People are not super bullish. They're also not super bearish on our markets, which in a weird way could say, hey, stocks could continue to rally further from here. Now, if we take a look at the sentiment gauge for AMC stock here on the day today, no surprise, you went from extremely bullish yesterday for no real rhyme or reason. You're now at 44, which is considered bearish. Message volume is actually increasing. You're seeing more messaging volume around AMC stock today, from 47 yesterday to 51 today, and the participation ratio still is on the low side at 41. The percentage of stocks today above their 50-day moving average is up 2.37% today to 63.83%. But the breadth in this market is very poor. It's very much a, top 10 stocks in the market's really leading the way. Some stocks have started to do a little bit better over the past week or so, but still, it's not a great market for some of your small cap names. A stock like AMC is, well, not doing as well as, other stocks like a Magnificent Seven name, so on and so forth. So definitely something to be watching for. But if breadth does increase from here, that's how you likely get, new highs in our markets and a continuation rally broadly. I doubt your big tech names are going to continue at this pace, but you never know. And as expected, guys, short interest of free float is increasing again, now above 10% for the first time in a long time, to 10.32%. You're starting to get to high levels of short interest that are represented here on the Ortex data. Now, what I think is actually happening, I've explained this before on the channel, but I will explain it again. So let's say, I think AMC stock is 200% sold short, right? Now, a lot of those short positions are hidden using option activity. Well, as time goes on, if shorts don't cover, more of those short positions are likely to seek through the cracks, if you will, to not be not be accounted for in some of the option activity, or with the new proposed rule change that just went into effect, some of those short positions are likely being brought to the light, if you will. Not all of that is being accounted for. If the stock's 200% short, in my opinion, then 10% short interest likely continues to climb, probably to about 20% over the next couple of weeks, next month or two here. That's my expectation. We'll see what happens. You do have $106.81 million worth of short positions currently in AMC stock, 1.36 days to cover. 25.86 million shares currently sold short, 22.52 million shares currently out on loan, 1.06% cost to borrow, utilization of 34.4%, and a short score of 57.67 out of 100. Cost to borrow max sitting at about 1.35%. So obviously nothing to write home about there. As far as the option activity, you don't have anything yet being registered from hedge funds and institutions, but overall, pretty bullish day. 74.41% of the option activity is to the call side today, and 25.59% of the option activity is to the put side today. So overall, relatively strong day as far as AMC option activity. And if we take a look at the Stock O tracker data, today is Thursday. That means you're getting pretty close to the end of the week. So the call side, you got about 9,600 calls currently in the money, 81,000 calls out the money, 21,000 puts in the money, and 19,000 puts that are out the money. So there definitely is some activity here that could help AMC have a maybe a strong Friday. We'll have to see. It's you would have to see a pretty sizable move though to consider Friday a strong day. Just be it that we're trading near all-time lows. You're about 12 cents higher than your all-time low, or multi-year low, I should say, at $4.01 per share. The stock remains severely oversold as well, with an RSI of 25.09. So one of these days, we're likely to wake up to a very strong move higher. 5% or so move higher would not surprise me on very little good news. So definitely keep that in mind. The stock is at $4.13 per share, up a fraction of a penny here on the day today, so not too much is happening. The volume has also been pretty low recently as AMC stock has been falling. So let me know what you think about this information down below in the comment section. Are you bullish? Are you bearish? Are you neutral? Are you just kind of going with the flow and seeing what happens next? Hit the like button as well as subscribe to the channel on your way out of this video if you made it to the end of this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.